Are you a first-time home buyer considering using an FHA loan to purchase a home? Well, in today's video, we're going to talk about the changing housing market and how it might be a little bit easier to get an FHA loan accepted as we transition through 2022. In addition to that, we're going to talk about the FHA loan requirements. We're going to talk about what you need to know in order to use an FHA loan. Now, in today's video, I'm not going to dive into the detail of each one of these requirements. What I'll do at the end of this video is link to a video where I describe that in great detail, but I want to spend some time talking about the requirements of FHA and why, if you've had trouble using FHA in the past, might be a good time to reconsider it. Now, before we dive into that information, I want to take a minute and ask a favor. If you find any value in today's content at all, do me a favor, hit that thumbs up. Feel free to subscribe to the channel to stay updated on everything FHA as well as real estate related. So FHA loans are typically associated with first-time homebuyers because they allow a minimum down payment. Now, something I like to address in every single video where I discuss FHA is FHA loans are not just for first-time homebuyers. You can use it as a first-time homebuyer, or you can use it as someone that has owned multiple properties over the course of your life. So it's not limited to first-time homebuyers. And with that said, neither is the 3.5% down payment. So if you've bought one house or 10 houses using FHA, you can still get away with the minimal down payment. And that down payment for FHA is just 3.5%. So if you buy a $100,000 home, that's $3,500. $200,000 home, $7,000, $300,000, $10,500, and the list goes on. You can see the math here I put up on the screen to give you an idea of what the down payment would look like if you were considering using FHA to buy a home. And the next thing FHA loans are known for is allowing lower credit scores. That's definitely one of the benefits of being able to use an FHA loan outside of the minimum 3.5% down payment. But if you have higher credit scores, you can still use FHA. There are definitely some benefits to using FHA, which we'll talk about in a little bit more detail as we go throughout this video, which we'll talk about more here in just a minute. But if you have 10% to put down, FHA will allow you to go down to a minimum credit score of 500. Now, what I wanted to discuss here is that although FHA allows 500 credit scores with 10% down or 3.5% down as low as a 580 credit score, you may still have trouble in this market finding a lender that can do super low credit scores like this, because many lenders out there have overlays on their programs. Just because FHA allows it doesn't necessarily mean the lender that you're going to allows it. They might set their own standards and say, hey, we will only allow credit scores of 640. So that's why it's important, if you're getting a loan, regardless of whether it's FHA or conventional or a VA loan for that matter, to have a conversation with multiple sources. Have a conversation with your local bank, maybe your credit union, but also talk to a mortgage broker, because brokers have access to multiple programs. They can, run it through one broker, and that broker may have overlays, and they may be able to run it through another broker who has no overlays on their programs. And so in some instances, you might not get approved, when in other cases you might. And that's why it's a good idea to have multiple conversations. Now, if you're watching this wondering how do you get in touch with somebody that understands this, doesn't have overlays or what have you, and want to have those additional conversations, I've actually done the hard work. I have a list of experts that I trust that I can refer you to that will take great care of you. I'm going to put a link here on the screen. If you go to that website, type in your information, I'll get you in touch with them, and they can run over your scenario and see if it's a good fit. Now, before we get into the additional qualifications of using FHA, I want to talk about the changing housing market here for just a moment and why FHA loans might be considered once again. We've been in a housing market over the last couple of years with a very low supply of homes, high buyer demand. Things have been moving very, very quickly. A lot of times there have been multiple offers on properties, homes closing above the asking price, just a lot of craziness in the housing market. Well, over the last couple of months, what we've seen is the housing market slow a little bit. It's still a seller's market, so I don't want to set a precedent that that has changed, but things are slowing down. And with that, we're seeing a little bit more inventory. We're seeing buyer demand kind of back off a little bit. We're seeing properties sit on the market just a little bit longer. And so we're coming out of a market that was super, super competitive, and you were having to compete against multiple offers. So if you were an FHA buyer and you were only putting 3.5% down, and you were competing against buyers putting 10, 20, 30, 50% down in some cases, it was very hard to compete. The seller would look at your offer and say, yeah, you're pre-approved, you're good to go, I get it, but this guy over here, he's putting significantly more money down. They look like a more qualified buyer. And in some cases, they were a more qualified buyer because they had that additional down payment, but in some cases they weren't. So FHA loans kind of got a bad rap over the last couple of years because, buyers are only putting 3.5% down in many cases. But what I'm seeing happen over the last couple of weeks is homes are sitting a little bit longer. There's a little bit more inventory on the market. I can speak from being an agent that lists properties is that I have a couple listings that are sitting on the market that just 6 months ago would have sold instantly. And at this time, we'd be thrilled to see an FHA offer. So I think if you're a buyer out there and you're using an FHA loan, don't get discouraged about the type of loan that you're using. Now, in some markets, it's still going to be competitive. You're still going to have multiple offers. It's still going to be difficult. But at the same time, you might be in a market that's slowing a little bit. And you might have a better opportunity in the market that we're headed in to use an FHA loan because the seller ultimately wants to sell their home. And if you're the only offer on that property and you're an FHA loan, guess what? Chances are the seller's probably going to go with your offer or at least consider it, whereas a couple of months ago, it didn't even have a chance. So I want to encourage you, if you're out there in the market as a first-time home buyer or as a buyer who's purchased homes before and you're using FHA, now is a good time to continue pressing on. But at the same time, you need to understand as a buyer, we're in a market where home prices have gone well above what many people believed they could in just a short period of time. So if you're buying and using an FHA loan and only putting 3.5% down, just know that if the market does pull back shortly after you buy that home, you could be in a position where you're underwater on that home. So I think it's absolutely necessary in the market that we're moving into that if you're using an FHA loan, you understand, that there's more risk with home prices potentially pulling back, not seeing the price appreciation that we've seen, and in some cases maybe putting you underwater. So I think you need to absolutely 100% have a longer term time horizon when buying in this market. You need to be looking out 7-10 years and plan on owning that property. If you're someone using an FHA loan and you're just thinking, hey, I'm just going to buy it 1 or 2 years and I'm going to, sell that property and buy something bigger, maybe the market works out in your favor, but there's also a really good chance that prices stabilize and they don't really go up and they don't really go down. And while you are paying the principal down each month, you might be in a position where you're not gaining equity if you have to sell that property. So I just want to be really, really clear that there is more risk using an FHA loan in a market where we've seen the appreciation that we have than in a market where we've seen prices decline significantly and then you start to see increases. So just understand what you're getting into if you're a buyer and only putting 3.5% down. Now, if you were a buyer out there and you were having trouble getting your offer accepted, let me know in the comments below. Did you find success? Did you quit? Did you continue looking? Are you still looking from a couple of months ago? What are you actually seeing out there? I think this information can help potential buyers that are using FHA loans understand what the market is doing and could ultimately benefit them. So do me a favor, leave that in the comments below. Now, earlier in the video, I mentioned credit scores, you're going down to a 500 credit score, putting 10% down, and then purchasing with only 3.5% down if you had higher than a 580 credit score. Now, something to keep in mind with FHA loans is that you have mortgage insurance. Because you're putting less than 20% down on that property, they require mortgage insurance. Now, if you're just doing the 3.5% option, the down payment option, the mortgage insurance is going to stay on that loan for the life of the loan. It never falls off. even when you reach the 20% equity in that property. The only way to get rid of that mortgage insurance is to refinance out of FHA into a conventional loan. But if you're putting 10% down on FHA, the mortgage insurance will eventually fall off, but that doesn't happen until after year 11. Another thing to note with FHA loans is they can only be used for primary homes. They can't be used for a second home, and they can't be used for an investment property unless you plan on living in one of the units. FHA does allow you to buy multiple units, live in one of them, and rent the others out and use that income in order to help you qualify. And in that case, they do allow investment properties, but you still have to occupy one of those properties. Another nice thing about FHA loans is they have a higher debt to income ratio. You can typically qualify for more home using an FHA loan than you can any other type of program. So that is a huge benefit to using FHA. But one of the downsides is that if you're buying a condo, it actually has to be approved. Now, as I mentioned at the beginning of the video, I wasn't going to go into granular detail on each one of these requirements. What I'll do is I'll link to a video here where I describe all of this in more detail, but I wanted to make sure I touched on the fine points just so you understand what the requirements are for FHA. And the two last requirements that you need to know about is they do have a loan limit restriction with regards to the area that you're purchasing in, which again I described in that video. And lastly, you have to have steady proof of income as well as employment. So again, if you have any questions about FHA loans, do me a favor, check out that video in more detail. But what I really want you to get out of this video is that FHA loans are not bad loans. In fact, they're really, really good loans and can put you in a position financially to buy property where you otherwise wouldn't be able to. But again, you need to have that longer term time horizon. And I would also suggest having some money in the bank and not putting yourself in a position where you're house poor, you're stretching every single month to make those payments. So if you're watching this wondering, can you qualify for FHA? You need more details. Do me a favor, check out this video here. I dive into it in a granular level to help you understand. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.